Hey everyone, it's Evan here from the Trade Risk on Tuesday, March 6th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to kick things off with the S&P 500, jump right into the charts here. You can see, actually we're going to start right with a weekly picture first. The weekly time frame, each bar here represents 1 week of trading. You can see it's only Tuesday, but we're off to a strong start. We're up 3.75 points here in the SPY. That's good for 1.39%. And when we zoom in here and we look at this week's candle, you can see we are now currently back above the 8-period exponential moving average here on the weekly chart, which is flatlining, but it is still bullishly aligned and still above a rising 20-period EMA. So when we look at this picture, all things considered here, we are still in the context of a long-term uptrend. And when we look at our most recent sort of range here, the most recent swing low from the week of February the 9th down here right around 252. And we look at the highs here made, all-time highs made in late January at 286. We are basically in the 50% mark, 55% mark of this range towards resuming back to the upside, and we're above all of these short-term moving averages here on the weekly chart. So very much a point at which it looks like this time frame wants to maybe consolidate for a little bit as it hangs out here, and it has recently saw some range expansion, but still again within the context of that uptrend. So when we go back down to the daily chart here, and actually before we do, and one other note here on this weekly chart, one of the things we discussed last week was this bearish engulfing bar here that we put in last week, looking to see if sellers get that follow through to the downside, and immediately we can say that is not happening as of right now. It is only Tuesday, so this weekly bar can certainly morph and change shape here into the close on Friday, but as it stands right now, we are not seeing that immediate follow through to the downside after last week's bearish engulfing bar here on the S&P 500. So when we go back down to the daily chart, we get a little more, some more action points to sort of look at, some more shorter term levels to pay attention to. And as it stands, again, you can see we've rallied up strongly so far to start the week. It was really all the progress yesterday to kick off Monday. We did start off the week in the red here with this small gap lower for Monday morning, but buyers quickly kind of stepped in here, brought us back to flat, and then drove us to finish up a little over 1% here in the S&P 500, and that was a follow-through day after Friday's late day reversal. So remember, same kind of situation occurred on Friday. We had a gap lower, and buyers ended up picking us up, moved us back to flat on the day, and then rallied us back into positive territory to finish up 0.5% here on Friday. We got the follow-through today, yesterday on Monday, and then Tuesday we held our ground. We did probe into red territory briefly throughout the session, but the bulls so far seem to be holding fairly strong here at right around this 273 level in the SPY ETF. Now, this is a very important area. This is a very tricky area. When we look here and we just kind of zoom out, just look at this broad landscape here. We got the swing highs, the all-time highs up here at 286, 252 down here. Again, we are basically at the 55 or so percent retracement of this move lower from this range, if you will, and there is a lot of confluence in this area of technical indicators and prior supply. So first, looking at supply, remember we chopped around here for an entire week right at the tail end here of February for about 4 or 5 days in this range, carving out some back and forth trading, and you can see we're right back in that zone right now, kind of retesting all of the emotions that traded hands, all of the shares and emotional charge that traded hands just a couple of weeks ago. We are back to retesting that level. We have flat 8 and 20 period moving averages here. So the flat, so some of the fast moving averages are very flat in here, which indicates, again, indecision, choppy markets, back and forth trading when there's no trend and no real direction and momentum slope in these moving averages, it tells us that we need to be a little bit cautious here, that bull and bear traps like to kind of spring up on those extremes, and we need to be very cautious of follow through, because when we have a no slope, a flat 8 and 20 period in the very short term, that tells us again we need to be a little bit cautious there and not to get overly aggressive and get whipsawed in the near term. We also have a 50 period SMA, a 50 SMA that I know a lot of traders like to look at. I do not have one on this chart, but it is right above where we closed today. I think it's settling in right around 273 or so. I think it is still upwardly sloping, but the 50 SMA is right in this area as well. So when we really think about where we are right now at this type of level, this type of confluence between price action and technical indicators, this is a fairly high stakes area for the S&P 500 right now. And again, you can see it's occurring right in the midpoint of this big range that we've carved out over the past several weeks of trading. So the action here, the response around this 270, again, I keep calling it this 272 to 274 zone, 271 to 274. This general area is going to be very important to see if we can escape through it to the upside, or if we roll back over and start heading lower. If you are a bull here, if you want this market to go higher, if you are rooting for it to go higher, what you don't want to see happen at this point here, especially over the next couple of days into the end of the week, is you do not want to see range expansion. You don't want to see volatility and volume start to come in to the downside at this area. This is a point at which you want to see markets quiet down, stabilize, catch their footing. Even another day or two like today is completely fine, but not to give up too much ground and then potentially lift higher or work through some of this supply and hold these higher levels. If we actually see volume start to pour in, we see the VIX start to climb again, and we start to see us take out the prior day's lows, in this case Tuesday's lows right around 271 or so, and we see range expansion to the downside, that is exactly what you do not want to see if you are a bull, given the fact that we have so much confluence in this area. We have that prior supply, we have all the technical indicators lining up here. If we saw a sharp thrust lower, that would be the bearish scenario unfolding. And on the flip side, again, you want to see just this light kind of sideways consolidation either take place another couple of days like today, or you want to see just for us to charge right through this general area. When we were back here talking about this breakout, we were looking for follow through above 274 to get away from some of these technical indicators and some of this prior supply. That's the same thing we want at this point for the bulls. If you are bullish here, you want to see just a thrust away from here. You want these moving averages to start to flip back to the upside, start to expand higher here, start to get some momentum going, and you want to look for the low here from Friday to really turn into a potential higher low in the grand sort of pattern here. So you would basically have, you know, this swing low off of the February lows. Let's see if we can do it this way. So you'd have this swing low right here. Bear with me as I slowly draw this out. But you'd have, you'd have this swing low to high. You'd have this high to a low pullback, which would then turn into a higher low, which then would get you all the way back up towards those highs. Again, I'm projecting a measured move, which by no means this has to happen. I'm just showing you the fact that if this does turn into be a good higher low here, we want to see this rally continue. We'd want to take out this prior pivot, and that would be the path that we would expect this market to sort of embark on if the bulls are really going to take hand here and lift us higher to the upside. And then, of course, on the flip side here, what we would see on the bear case is, you know, if this happened to be a new kind of swing low impulse leg to the downside that started, and we fail sort of right around this level, we start to fail right around this 274 and roll over, suddenly you might just kind of get this two-legged move down back into this sweet spot of about 260 or so, which was more or less where the bulk of supply, where most of the lows occurred back here in February at the start of the month, or at the start of February, and maybe a retest over here or potentially something uglier, would start to unfold itself. But you'd want to see that, you'd want to pay attention to see if that rollover, if that thrust away happens. As it stands right now, bulls are holding firm here. So we're going to want to pay attention again. 271, 274, this general zone. We want to see how we can close out the week. We want to see us stay above some of these moving averages. We want to see us hold in the bulk of gains from Monday. That would be sort of both scenarios that I'd be paying attention to. But I think the big takeaway here is, you don't have to trade this zone. I think it's a very tricky zone. Again, back to the concept of flat moving averages, lots of headaches, lots of chop generally kind of coincides with markets that have flat moving averages like this over the near term. So I think it's something you want to be cautious of. Take a day or two off, wait for the market to get some confirmation. I think those are all reasonable strategies. If you do want to be involved in this market, just again, control your exposure via position size, stop losses, all that good stuff. Look for some relative strength. There are names out there. I put up a post yesterday with some trade ideas, some names that are holding up remarkably well in a market that, again, looking at the S&P 500 looks like a headache, but a lot of the setups that posted yesterday, they, picture the S&P 500 back up here at 286 or so, just kind of basing out and ready to break out to new highs. That's where you do see some opportunity in stocks where you do have some good relative strength, you have some select pockets of leadership, and if you are going to be playing on the long side, that is certainly my preferred way to get exposure, is to look for those leading stocks, and that's still probably, again, an advisable way rather than sort of, drudging through, the S&P 500 or trying to trade it right now in this choppy area here. Go to the pockets of strength if you want that exposure. Otherwise, again, take a couple of days off, let the market settle in here and see which way it wants to break, because it could lead to a more sustained sort of move into the next couple of weeks. So that I think is basically my thoughts here on the S&P 500. Gave you a couple of different scenarios to pay attention to. The levels, again, 271 to 274 in the immediate kind of zone of supply, and then the very clear sort of highs back from last Tuesday up here right around 278, and then the lows from last Friday down here at 265. I think those are your extreme sort of ranges that you'd be paying attention to on an upside or downside breakout or resolve. So yeah, I think that's it for the S&P 500. As far as breadth goes, again, one of the things I'm still waiting on to is I'm watching very closely. Again, I've brought it up. I'll bring it up again in this video, is the number of stocks hitting new 52-week highs and the number of stocks hitting new 52-week lows. That ratio is still very muted right now. We're still not seeing any big expansion one way or the other, and I'm still paying attention to that. Again, that indicator I do look at as a slightly longer term view gauge of market health and participation. Right now, again, fairly muted, so I'm paying attention to it. I want to see, again, if we do continue to break out here, if we do see the bulls have a strong week and rip back up towards this 280 level, the highs from last week, I want to see it accompanied by some breakout, some expansion in breadth to the upside. That's something we're still sort of waiting on. So that's the market for the S&P 500. Let's look at the Russell 2000, which is leading here. This is something that we picked up on last week on our weekend recap. We talked about the Russell 2000 taking charge and actually outperforming on a relative basis last week, and that trend is continuing right now. And as it stands, you can see we are actually closing at new highs here, new 20-day highs or 15-day highs, basically the highest close since February 2nd, or actually I guess since February the 1st. This is the highest close that we've seen for the Russell 2000, and you can see we are trying to clear above this 155 level, which is a significant area. We did top out here in December. We were resistance in here throughout the month of December, and then of course we failed here and kind of had this pivot thrust off of this level just last week or so, and we are now clearing back above it. So for small caps, which is again something we haven't seen in quite some time, they are starting to take the lead here to the upside. That is constructive for the market overall. We want to see these continue to lead to the upside, and take a look at the fast moving averages here. You can actually see you're starting to get that bullish crossover and some of that momentum start to now build in the MACD here above the zero line. That is the type of behavior that you want to see really unfold itself in the S&P 500. And if the Russell 2000 can continue to sort of do its job as being a leader right now, I think the S&P 500 would be hard pressed not to follow. So pay attention to the Russell, and then of course the NASDAQ 100. Take a look at the moving averages here, very much bullishly aligned, very much above the zero line here as terms of MACD goes. So there is some momentum, there is some kind of juice behind the Qs. We are still below all-time highs here, but very, very close to, again, breaking back towards new all-time highs. And as we noted in our weekend recap here, support did hold right around this 164, 165 area. That continues to be and will continue to be an important line in the sand going forward for the Qs. As long as we are above 165 or so and doing some healthy kind of basing out underneath all-time highs and above 165, I'd say that's fairly bullish posture for the NASDAQ 100. So really, we have the NASDAQ, which has that bullish tilt. We have the Russell 2000, which has the bullish tilt. And the S&P 500 is kind of sitting here in an awkward spot right now. And we're waiting to see if this can carry us forward like the Russell and the NASDAQ back towards those highs. Again, I think it's the bulls' job to sort of, or it's the bulls' game to lose at this point, and what we don't want to see is that bear expansion, that thrust lower that we talked about in that bear scenario at the beginning of this video. So that's the market environment overall. Hopefully that helps you guys. Let's take a look at some other major markets here. We'll go to TLT next, which was, nicely green for most of today, but we did see that fade into the close here. You can see we're down just slightly on the week, but basically it's very muted behavior. Nothing has changed here. We're still just range bound, trying to carve out a bottom, it seems, from the big slide throughout January, and TLT is sitting above longer term support here back from early 2017. It's trying to base out, trying to catch its breath, so we'll have to see how this acts, but for now still in a consolidation mode. Let's give it some time and see how that kind of shakes out over the next couple of weeks. We'll go to oil next, which you can see was pretty flat today, but it did have a nice constructive move yesterday, up almost 2%, getting back above some of these flat moving averages. It does look like it's still in sort of a period of consolidation here. Again, kind of triangle, coiling up a little bit here. You had this swing low here. You got potentially a higher swing low, but then you have these series of lower highs as well. So looks like, USO is going to be coming to a decision point fairly soon here. If you wanted to sort of extrapolate sort of this trend from the recent lows here. I'm going to let you guys draw that a little more precise, and then you can see if you got this slope coming in here, you can kind of wait patiently to see how tight this gets and look for some type of expansion out of that slope, and play accordingly if that's something that interests you. And natural gas is finally seeing some life here. We've had the tightest of ranges over the past couple of weeks here, but you can see now that we are finally starting to get a more meaningful move, almost 2% higher there. That's constructive, back above the 20 period for the first time since the end of January. So that is constructive. Still don't have the 8 period over the 20 period as I prefer, but there is, again, some signs of life there that the bulls are starting to do something with this sideways range that carved out for basically the entire month of February. So something slightly optimistic there for you natural gas bulls. And when we go to the metals next, GLD, nice session today for both gold and silver. We didn't close at the highs, but still did get a sort of second leg higher here. We broke back above the 8 and 20 period, which is now trying to race back to get that bullish alignment going. And we did start to at least attempt to, or closed right at this 126.50 area that has been a point at which is, kind of a midpoint of control here in this larger consolidation pattern. So nice move by the bulls, all things considered there in gold. We still have this position on. If you recall, we talked about our entry here back on Thursday on this test and hold of support is when we got long, and so far we are still sitting in this long position and sort of enjoying today's gains and waiting to see how the rest of this week unfolds. So still holding a long position there in gold. Nice move by the bulls. Silver, same exact thing. Nice bullish move higher here, almost 2%, getting back above some of these fast moving averages, clearing above some of this supply in here. Maybe a bit of a double bottom from, again, the Thursday, the March 1st lows right here. And again, that would be a constructive move for the silver bulls. You'd want to next get back above $16 or so, and then all of a sudden, you know, we can start to cruise and look at some of these higher levels, these upper ranges that we were dealing with back at the end of 2017. So that, I think, covers basically everything I wanted to discuss. Not going to go into sectors in today's video, keep things a little bit lighter, or at least I try to for the midweek video every Tuesday. So make sure you do check back every Tuesday to hear these videos. And then on Friday, we do the longer form video with some more sector analysis and all that good stuff. So thank you so much, as always, for watching. If you do like the videos, do subscribe to our YouTube channel. Thanks so much, and talk to you on Friday.